Welcome to our panel today. My name is Michelle Lee. I'm CEO of AMTD Digital, the Fintech arm of AMTD Group. Under AMTD Digital, we have the Airstar Bank, one of the 8 virtual banks in Hong Kong. Then we are applying for another digital bank license with our partner Xiaomi. We have made quite a few strategic investment into fintech, including Policy Pal in InsurTech, formal pay in payments, and coverage in private exchange. We have made a few other strategic investments through our AMTD ASEAN Solidarity Fund. The goal is connect all the offerings from our investee companies and partners, bring that into the bank, and provide more touch points and use cases for our customers. All right, so today we have 2 strategic investors in fintech. One represents the technology industry, the other represents the financial institutions. So Sabrina, I'll let you introduce yourself.
Thank you, pleasure to be here. So I'm Sabrina Tajjan. I'm heading blockchain investments at Line under our dedicated team called Unblock Ventures. So we focus mainly on early stage blockchain startups and investing in both cryptocurrency and equity. And as such, we see a lot of companies that play in the fintech vertical.
Fantastic. Hi, everyone. It's Alok Advani. I'm the managing partner of Fidelity International Strategic Ventures. We are a fintech-focused investment group that looks at investments where their strategic angle is back to Fidelity as its role as a wealth manager and an asset manager. We usually focus on early stage investments, Series A's and B's, usually sort of $5–10 million check sizes, and we invest globally, largely around the world, except the US.
All right, let's go right into our first question. So Sabrina, what's Line's approach to strategic investment in fintech? Is it mostly blockchain or crypto focused?
So short answer, it's not only focused on blockchain and crypto. Actually, Line invests in fintech beyond blockchain. The broader tech investments at Line are done by Line Ventures. So that includes some of the fintech. But when it comes to blockchain and crypto, that's more specifically done through Unblock Ventures. So reason why we created Unblock Ventures a couple of years ago, there was this part of the blockchain initiative where we saw a lot of blockchain related deal flow. But Line didn't really have a framework to invest in cryptocurrencies, and it does require some specialized skills and capabilities like asset management, custody, and then some blockchain expertise to evaluate the project. So made sense to create a new team and vehicle for that purpose. So I guess I could speak to the blockchain investment part, where for us, that's a tool to keep our finger on the pulse of the blockchain industry. That's a way to create relationships with the ecosystem. It's a very quickly changing industry, so we need to kind of be up to speed, and also a very good tool to source potential partners in addition to making returns.
All right, okay. For Alok, so what are Fidelity's focus areas in fintech?
Sure. As I mentioned, we focus on things that impact wealth and asset management. And so our goal is to invest in technologies where they can help us enter or enhance our position in new markets, access new clients, or disrupt existing processes. And so essentially anything that touches the world of wealth and assets. So that is digital distribution and advice, capital markets, regulatory technology, AI and analytics, blockchain, and operational efficiency tools. So due to a narrow focus, we tend to be quite thematic in our approach. And so a few examples of themes that we're working on now is sort of the extension of open banking to open finance, financial services, which can be further provided through the workplace or through your employer to the employees, democratizing access to alternative assets, and how to offer more asset management capabilities as a service.
That's amazing. So you could potentially be the user of the technology, also as an advocate for the technology.
Absolutely.
Okay, so next question. So for both of you, once the investment has been made, how do you explore synergies with those portfolio companies?
Okay, so I guess I will start. So yeah, what many fintech and blockchain companies do approach Line as thinking of us as a strategic investor, and I would say rightfully so, because Line's not only a messaging app, but We're also offering a growing offering of fintech services. So you may have heard of Line Pay for payments.
Yeah.
Additionally, we offer access to securities and insurance products through our platform that's maybe not as well known. We have like a joint venture with Mizuho Bank in Japan. We have another one with KB Bank in Thailand and banking license in Taiwan. So I'd say we're definitely a fintech player where there's a lot of potential synergies with fintech companies. And for us, testing for synergies, it happens often even before we invest. On the blockchain side, there are three product areas where I can look for synergies pretty easily. We're operating two digital asset exchanges, one that's operating outside of Japan and one that's operating in Japan. In addition to that, we have a broad blockchain protocol, and it's called Line Blockchain. That was meant to help us interact with third-party developers and other projects. So that is meant for partnering. So with that, I can test the fit with any of these. And sometimes I could go beyond these services. So because blockchain is a very horizontal technology, so it could be if it's a fintech and they want to interact with Line Pay, then I try to connect them with Line Pay and like see if there's some traction there. We have like 100 services beyond messaging, so it could go pretty deep. So I tend to make introductions to the relevant business units and then facilitate conversations and see where that goes. And if there is some traction even before we invest, then that's great because that can increase our conviction that there's a good product market fit and that there's a good synergy with Line.
Great. That's amazing. Line is a super app everywhere.
Trying.
So how about you, Alaki?
I mean, if I may give you our perspective, right? So I think it's similar in many ways, but sort of we may do things a little bit differently. So, my team is responsible for three things, right? So we source and make investments. We do the portfolio management of the companies we invest in, but then we're also thinking about how do we create that synergy back? How do we make that implementation, product partnership, co-development opportunities happen? So with each theme that I talked about and company, we need to satisfy two main objectives. Is it a good investment financially? And why is it strategic for Fidelity? That's right up front, right? And that's the first questions that we get asked by investment committee. And the way we sort of bring these synergies to bear starts right there from the investment committee as well, where our investment committee is made up of, board members of Fidelity, the CEO and CFO of Fidelity International, and some other folks from our sort of investing businesses that have sort of capability investing into venture as well. So we start with that synergy right there. And then when we think about something as strategic, the strategic nature can be a commercial partnership right off the bat or an application today, or it could be something in the future. And we're very happy to sort of stretch across that timeline because sometimes the incumbent businesses aren't always ready to absorb some of these technologies and implement them day one. So I think that's something that we have to be very cognizant of. We also involve some of the business lines, like Sabrina was mentioning as well. If it's a particular business area that has use of a particular technology or interest in a particular area, we'll involve them in some of the discussions, diligence, and conversations with the companies to validate that as well. And then we work effectively at ensuring that we sync up our investments with the proof of concepts that need to happen at the different stages, and eventually implementations and partnerships right from the get-go. So we're thinking about that strategic synergy the minute we think about that company as a potential investment, not after we've made the investment. Because oftentimes, and this is a critique that happens across, and the reason I think you asked the question is because incumbent financial institutions are usually bad at realizing the synergies. They're great at making investments, they're bad at realizing the synergies. So we're trying to do it better.
Yeah, okay, that's great. All right, so next question, COVID impact. So the question is actually straightforward. One, what's the impact to your investment approach? And secondly, to your engagement with your portfolio companies. And third, how does that change the attitude of fintech founders towards strategic investments?
So yeah, COVID has definitely impacted our investment activity. So we've been more conservative and more focused on strengthening our existing portfolio. So we've been more hands-on with the founders. So since we invest in blockchain, that covers different verticals, and I think fintech is probably the one sector that has been hit the least by COVID, and I think that's because COVID has accelerated digital transformation. I'd say I'd see three drivers to explain this. First is it's accelerated the digitization of payments, and there's been growing aversion to cash, which is seen as unhygienic. And there's also global, I would say, government-led push for central bank digital currencies, so that's creating some opportunities. Second driver I see is the retail and institutional investors. They've shown some new interest for cryptocurrencies, after seeing interest rates plummet, after seeing so much, USD being printed in the beginning of the crisis. So some are thinking of Bitcoin or other cryptos as a hedge. So that's good for the industry. And the third driver I see is retail investors are kind of increasingly wary of a traditional finance player and like trying to seek better autonomy and like in managing their assets. And so they have more appetite for non-traditional financial services. So that's evidenced by a strong uptick over the summer in area called decentralized finance, or you might probably heard of. Overall, I would say we've been more hands-on with our founders, but fintech has been, I would say, those are the lucky ones among our portfolio. We've had actually some of them have had better acceleration than anything. In terms of founder attitudes, are they more into strategic investments? I think it was always pretty high in their priority list, even before COVID. So I can't say that I've noticed a big difference there.
Okay, great. How about you, Alaki?
I mean, I think like many investors, initially when we went into lockdown in March, we sort of focused on the portfolio, spent a lot of time with our founders, and there were two key things we were looking at: revenues and cash, right? So I think the key is how much cash runway do you have, how long can you last, and what do you need? I think that lasted a couple of months, and realistically, when we look at the existing portfolio, it really flourished through lockdown in a strange way. Like Sabrina was saying, fintech has done really well in both sides of the equation, the B2B side and more enterprise sales into financial services. You've now had better access to the people you want to speak to. People at home have more time rather than getting 5 different operations, technology, and business people in a room. It's much easier to get people together. So one of our companies, Steeleye, which is focused on RegTech, had consistent plays of sales every single month starting in sort of March and April, which it never slowed down. On the B2C side, I think it's a different factor where people are more focused on their own finances, preparing for financial futures, say rainy day savings, making sure they've got enough savings, investment, financial planning in their own controls as opposed to leaving it to somebody else. And I think that's been really interesting because that's had an impact on some of these B2C players that are, digital savings, investing, portfolio management, robo-advice type platforms. Yeah. And those have flourished as well. We've seen increased user bases, asset flows, etc. And then starting in sort of May, we started looking again at our active pipeline and what we had in the mix, and executing that pipeline. We currently have 5 transactions that we're in the middle of, executing across multiple geographies and themes, and so that's been very, very active. We completed one 2 weeks ago. We complete one next week. So we're very active in this space as we look at some of these deals. And then the other thing that happened through the COVID period is we went through a rebrand. And so we rebranded ourselves from 8 Roads to sort of Fidelity International Strategic Ventures in August, which enabled us to be much more clear about our mission, vision, and the benefit we bring to any founder. This we think resonated well with the founders, with the portfolio companies, and with VCs. The most resounding feedback we got from people was, well, now we know what you guys do and how you can help us. So which was great. We get to use the Fidelity branding as well. Which can definitely help us. So it's been an interesting period. We've had good success with sort of building trust and relationships with the founders, and also executing on some new investments.
Yeah, from my own experience, I feel the founders are more open to strategic investment in a way that, because for example, for B2B, it's still very hard for them to sell. The sales cycle is very long. So they need bigger institution to help them push that through. So also because of the funding pressure during the COVID, it's hard for them to raise new money as well. So that's my experience. All right, I guess we're towards the end of the panel. So I want both of you to give some tips, advice to the fintech entrepreneurs.
So
why don't you go first?
Okay. I mean, I would say definitely double down on your efforts because I mean, there's still a lot to disrupt in the financial industry, and I think more than ever is a time for opportunity. I mean, the backbone of a financial infrastructure is what 40 to 60 years old and highly inefficient still. So I think we live in a world where we can message each other across the world like instantly, and meanwhile, it still takes 2 days, to send money internationally. So I think really the user expectations are up here, where they expect the same kind of convenience from their financial services as they get from their smartphone, right? And so there's a gap that's still pretty large to bridge. So this is the fintech startups opportunity to run with it, because they'll probably be faster than the more traditional fintech finance players. So in addition to upgrading financial systems and like improving user experience, I think there are also many intermediaries that could be displaced. And this is where, for example, blockchain as a technology could play a major role. And maybe my last piece of advice for fintech entrepreneurs is never underestimate the legal aspects, because that always takes time and a lot of resources, and plan for it early.
I mean, if I may add, I think those are all very good points, Sabrina. If I may add, yeah, there's probably three things that I would say. One is to any entrepreneur, not just fintech entrepreneurs, just know your domain and your space really well. Figure out your TAM, figure out your metrics, figure out your competition and your client need really, really well, because that's the stuff that we're going to ask about. I think the second is to be really authentic, like just be transparent and honest in your dealings. Find the investors that you can resonate with, because honestly, there's going to be good times and bad times. You're going to have to live with these people for a while. And the last one I think I would say is, sort of keep your eyes and ears open, like focus on your awareness, right? Because you may learn something from other faculties, other industries happening around you. And how you could see the impact that it might have on those industries and what you can borrow and enhance your own offering, right? So there's a lot that you've seen has come out of sort of whether it's Silicon Valley or China or Japan or other parts of Europe that have been employed across different areas, different verticals, different industries and businesses, but can have an impact for us in financial services. Blockchain is a classic application. AI is another one, right? I mean, there's a lot of different, and then a lot of the consumer-centric sort of, UI benefits have also been there. So how can you benefit from some of those things and bringing those into financial services? Whereas, with the point that Sabrina mentioned, keep that regulatory hat on very, very clearly, because that's the difference. That's where stuff that you're trying to break in other domains doesn't work so well in finance. So just make sure you keep that regulatory element clear. But I'll stop there.
All right. Okay. I guess that concludes our panel. Thank you both very much. Okay.
Thank you.
Very welcome. Thanks for having us. Thanks,
for
Michelle.
having us.